Welcome to your top-rated global podcast that is your one-stop shop specializing in entrepreneurship, self-development, smart investment decisions, and other relevant topics that add value. This podcast is hosted by owner, doctor, and content creator Dustin Steffi. We are blessed to have accolades that include a 2022 nomination by the People's Podcast Awards in the category of business, which is voted on by the people, all of you. Money donated to two amazing causes, cystic fibrosis and the Boys and Girls Club. Lastly, global recognition of being a top 50 podcast in 4 countries. Without further ado, let's chop it up. Welcome to another episode of Chopping with Fire. You are joined with your host today, Dustin Steffi, and I have Chase on as well. I am going to hand over the mic to him and let him kind of talk about who he is and what he does. Chase, how are you?
Yeah, great. Thanks for having me on today.
Thank you for coming on.
Yeah, so Chase and Sonia, CPA licensed in Texas. I've had my company since 2011, so we're almost 12 years old in a couple months. And we have a team of 20 people currently, half accounting, half tax, basically. Anywhere from like transactional work, from accounting, bookkeeping, tax prep. We also do monthly forecasting, weekly, monthly forecasting, budgeting with our in-house controller. We specialize in more like very tech-based and pretty agnostic on industries, other than we really don't do restaurants. We don't do construction companies, but accounting and taxes are the same for us anywhere else. So we focus under 30, 40 million, small business, anywhere from your one owner consultant, which we were just talking about before we hit record here, to 30, 40 million, Amazon business, online seller business, larger clients, maybe 1 to 10 employees about. And that's kind of our market. So we started out just focusing on small business, kind of bringing in-house the transactional and the advisory and the planning work. Because at the time in 2011, I mean, it doesn't seem that way today, but at the time, nobody was doing it for small business. It was only for larger companies. And that's how we got started. And here we are today, overnight success, and still going.
And you all might be wondering why I have Chase on. Why do I have a CPA on? And the answer is going to become abundantly clear here as we talk through. But the short answer is, as you guys know, we are entrepreneurship, self-development, and smart investment podcast. And so there are some things that I think that we take for granted that some business owners, we think know, but really do they know? And so Chase and I are going to go through a journey here where we kind of educate and help business owners and entrepreneurs that are either starting or seasoned veterans understand why and the importance of having a CPA, whether it be Chase or anyone for that matter, and like where and why your investments should kind of go through like having a CPA.
Sounds awesome. Let's go.
So with that being said, Chase, I'm gonna just ask the hard question first. What are some of the pitfalls that you see with businesses in general, or what have you seen over the years in your career that people should avoid, right? Like I'm sure you've seen a lot of things. So like walk me through that.
It's always on a case by case basis. I think the biggest one is cash flow. Budgeting your money. A lot of people before they come to us don't consider saving for taxes and paying them. I mean, you hear it on, podcasts and American Greed all the time. They just get back taxes. And so we're always constantly making sure we're proactive and making sure saving for taxes too. But really cash flow and budgeting, especially if you're in the e-com space, online seller space, like, cash flow is imminent in order to buy inventory to sell it and make a profit. Um, any kind of business owner where, if you're just a one owner consultant, I mean, it's important too to make sure you're saving enough for April 15th next year. And, saving for retirement, again, case by case, but really just depends on how much money you're making, what's your personal budget like. That's really what we run into the biggest, I would say over the years, is just kind of cash flow budgeting conversation. The second one, it's kind of a little bit different, but over 20 plus years of doing this, myself, like it's people get into partnerships and don't recognize that you're in the honeymoon phase when you partner up with somebody. And I've been in one, and I've seen clients go into it. I've seen them try to exit. I've seen it get nasty. I've seen it become okay. Like it. So I think if you're considering getting into business with somebody that's not your spouse, you want to make sure you have everything documented. You want to get an attorney. Don't use one of the shops to go set up an LLC real cheap. You want to have an operating agreement. You want to identify what each of you are doing, what your roles are, how you're making money, how you're bringing income to the partnership, what's the distributions like. All of that really never gets written down generally when you start out. You're just kind of in the honeymoon phase and you're like, oh, this sounds great, let's do it together. And then you just kind of up and run it. And then 3 or 5 years down the road, it can get sideways sometimes, and people move on or they want to exit out and then they want more money than they deserve. And it's just a big fight back and forth. So I would say partnerships, are a big one, and budget cash flows probably the number one thing.
The biggest thing that I took from that came across to my mind was that movie about Facebook with Mark Zuckerberg. I feel like when you were talking about partnerships and cash flow and kind of having the operating agreements and all of that, I think that's huge and that's important, and I think it's overlooked sometimes. And I think that movie did a really good job of like showing the legal battle of what happened. I mean, I really feel like the people that were involved, they kind of got shafted a little bit, in my opinion.
Well, that's a perfect example because a lot of times, one person's bringing the money and the other one's bringing the operation or the expertise. And those are the ones that I generally have found goes sideways quicker because, the one that put up the money wants the money back, but the cash flow doesn't justify it. In the same token, you're trying to pay yourselves while you're both doing some work or one of you's doing more work. And then it's like, well, I'm bringing the technology, or I'm bringing the expertise, and I'm doing the day to day, and it just becomes this contention very quickly. So, that needs to be identified. I mean, I would always just do a loan agreement or payback agreement, so it's very stated, clear terms of how the investor's getting their money back, in addition to how each of you are going to make a living as you build the partnership together.
Which leads me to my next question, and I feel like this was hard for me. Electing the right like tax benefits, right? Or the right term for your business. So like for example, we have sole proprietors, we have partnerships, we have LLCs, we have S corps, we have C corps, we have a million different things. How do you determine the right election for your business? How do you determine the right structure to even get started?
Yeah, great question. I mean, we have a page on our website that kind of breaks it down a little bit. I mean, effectively, there's only two structures you have from a legal perspective: one, LLC; two, Inc. That's it. Um, from there, it becomes a tax election. An LLC can be a sole prop. So if you're making under 50K, you want to be an LLC. That's what I would recommend. Um, LLCs can be taxed as an S corp, partnership, C corp, or sole prop. And then you've got Inc., which is required to file a business filing. So if you're a sole proprietor, making under 50K is kind of our break even, and you're not sure, maybe you're around there, you're under it for a while. To keep your costs down, just be an LLC, because you're not required to file a federal business return. An Inc. is required to file a federal business return. It's automatically a corporation when it sets itself up with the IRS EIN number. And so from there, you can make an S corp election with an Inc. You can file as a partnership as an Inc. But that's generally the breakdown of like the setup. So I would say, our general advice, obviously case by case, but is it just you? What is your exit strategy? Is this a lifestyle business, or, are you looking to grow a brand and exit out in 2 or 3 years? Are you looking to take on investment, private equity, any kind of loans? Like that all has an effect on how it should be set up, because, partnerships have 2 columns of profit and loss and equity. Maybe you want to give away equity to employees you're hiring. Maybe it's an Inc. When you want a 83B election, which is basically if you invest in a qualified small business stock, and you're giving shares away. If it's 83B qualified, like it becomes tax free after 5 years if you hold it. So there's all kinds of different nuances and caveats, but I would say get a good business attorney, or at least talk to your CPA and have a quick conversation about what you're looking to do, because all of that has a tax effect, and it has a long-term effect of with you and how your taxes are played into it. What's your tax effect going to be if you're a corporation? I mean, the only way to get money out is W-2 payroll or dividends. But if it's necessary because you have investor money or private equity money, then, I mean, you don't have really a choice. But, if you're putting up your own money and you're 100% owner, you're not giving away equity. I mean, that's pretty much LLC S corp, but you're building a brand. So all kinds of different nuances, but that kind of hopefully helps break it down a little bit.
It helps our listeners to understand that it's important to do your own research, one, and then two, to educate yourself on all the different structures. Because yes, you're right, there's only two, LLC or Inc., but then there's all the elections in between for the tax elections. And so, like you stated, I think it's important, and I've always learned this, to have a good business attorney. And we're about to talk about why it's important to have a CPA, which leads into the next question. Why have a CPA for a business? Why is that important? Why can't I be the owner that just does it on my own? Obviously, I mean, the short answer is there's so much that goes into it, and I think we overlook some things, but I'm sure you can shed some light on this.
Yeah, we're always promoting, have a CPA when you have a business, you have rental property. I mean, I own 15 rentals myself right now. I have multiple businesses. So I've always been entrepreneurial. We're not the typical CPA and just running a lifestyle firm, but so I've always communicated that it's important to consult up front, because even when you're going to register for your EIN number, that is basically the start of your tax election and how you're going to have to proceed going forward. Just so from the onset, before you even really start the business, so to speak, before you even register that EIN number, I mean, we work with an attorney. A lot of times he's checking with me, hey, is this the right thing? Is this not? Like, what should they do in this situation? Because when it comes to us, we're either going to have to clean it up or it's correct, one of the two. But a licensed CPA, we're always communicating is important, because with a licensed CPA, you have recourse. And a lot of people don't understand, there's a state board around licensing, just like doctors and attorneys. And if something goes wrong or something goes awry, or there's an issue or you can't get your information, whatever it may be, you at least have a resource to go to. You have the state board to go to, and a CPA is required to respond to a complaint within 30 days back to the board and provide support or information. So, a prime example is if somebody's working with just a tax shop, an unlicensed tax person, and they file their returns, and 2 years down the road, you lost a copy of it and you need it to file a mortgage, apply for a mortgage or something. You can't get a copy of it because you can't track this person down. There's no way to get it. There's no person to call. You can't call the IRS. They don't care. There's no, tax shop forum you can go to track this person down. If it's a CPA firm, you can call the board if you can't get a hold of that person, even if it's an individual. CPAs are not, those that are legitimate are not going to not respond because it can affect their license. And it takes a lot of work, just like a doctor, attorney, or any licensed professional, to get a CPA license. And I'm not going to give up my profession or professional liability because I didn't answer, somebody's request in 30 days.
What is the average cost to like for my small businesses, like super small? So even Chop and Entertainment, me, what is the average cost of a CPA usually?
To be honest, it varies. It varies by market. It varies by, what you're doing. We started off, now we're, I would say, mid-range. We're not ultra expensive, but we charge for our value and what we deliver to our clients. But it really just depends on what you're needing and what you're doing. The way we price is kind of more by what we're doing for you. So pass through software, accounting time, payroll help, sales tax help, controller help. Are we checking in weekly, monthly, quarterly, semi-annually, business personal taxes, CFO, fractional CFO work, all of those little pieces, we kind of add up together and determine a fixed price. But for every firm's different. A lot of them charge hourly, a lot of them charge tax only, and then they'll charge for bookkeeping hourly or whatever. But it really depends on the market. I think in general, we're in Austin, so we're not small town America cheap, but I would say the minimum's probably around 550, 600. For a one owner S corp today, needing payroll help because they have to payroll themselves a reasonable salary, and business and personal taxes. And then, we check in twice a year on one owner S corps and make sure you're on track, being progressive with our advice, and making sure the reasonable salaries there, retirement planning's there if you want to contribute, etc.
The way I see it, like it may sound like a big number, especially for these small businesses, the average of 500 to 600. But if I'm avoiding lawsuits and fines and fees and other things, and I have someone professional like you that is really taking a look at all the tax benefits and making sure we get more bang for the buck, it's actually worth it, in my opinion.
Yeah, it seems like a big number up front, but again, if you're making, let's just call it $100,000 in contractor income or net profit from your business, and you don't even have an LLC set up, or you have an LLC, you're filing as a Schedule C sole proprietor on your 1040. That example, if you take that 100,000, you're going to be paying versus an S corp. You're going to save about $9,200 in unnecessary payroll taxes in that example, because as a Schedule C filer, all of that 100,000 is subject to payroll tax. As an S corp, only a reasonable portion is subject to payroll tax. So that difference that we would assign as reasonable, effectively, that's about $9,200. So yeah, you're paying us what, 5, 6 grand, you're still netting a $3,000 saving. So, you're going to have to pay for the expertise. But that's like the base minimum that you're going to save, which is why our break even's like 50, 60K for the S Corp, because just to do a basic tax return for an S Corp business, that's where the cost effectiveness comes in. And that's why we don't even recommend it below 50, 60K right now. But 100K is, I mean, that's like a prime example of, if you're a Schedule C sole proprietor, there's no reason you shouldn't set up an LLC S Corp, because you're just wasting money to the government.
And that is why having a CPA is important, in my opinion. Is you guys keep up with your licensing, you keep up with all the rules and regulations, so you guys know kind of what it takes to file the most appropriate tax return, in my opinion.
Yeah, and a lot of people don't understand a CPA's name is on your return. So a firm like us, we describe ourselves, we're not ultra risky, we're not ultra conservative, but we play in the gray area. I mean, I have businesses like I mentioned too. I mean, I'm going to maximize the tax code as much as I can. Um, and so with that, our name is on that return too. So if that comes back and gets questioned, obviously we're in that conversation with the IRS too, because we prepared it and we signed it as well. A lot of people don't recognize that fact when a CPA is signing the return, or any preparer really is signing it. But if a CPA signs it, again, you have recourse against professional liability insurance or the state board licensing. So, most CPAs aren't going to risk, again, we're not going to risk our license for somebody that wants to be risky or, be questionable on their expenses. It's just not worth the risk for us. So we just won't do it. But, we will maximize deductions as much as possible. My team isn't traditionally like just taking your information and spitting it back out. We take it, prepare it, questions, like trying to dig out deductions from you, based off, your industry, what you're doing. And we try to be progressive in that way, to make sure we're maximizing the return. And that's why we feel like we justify the prices we charge, today, because we're not just send us your P&L and we'll knock it out for you and here you go.
I think it's important to note that you really care about making sure that each client is getting the best bang for the buck, right? Like, if I'm hiring you to do everything for my business, I'm not hiring you just because it's the right thing to do to have a CPA and to have that knowledge. I'm also hiring you because I trust you with, like, making sure that you're doing the right thing by me.
Yeah, I always took the position, and when I was doing taxes myself with clients, I always took the position of basically owning what I'm preparing as if it was my return with their data. And so a lot of times, like I learned to communicate a little bit, differently later on. But in the beginning, I'd just be like passionate about, why aren't you doing this? You need to be doing this way. And clients were receptive sometimes, sometimes not. But and that's how I train my team to be, proactive too, and really taking ownership of what they're preparing, not just going through the motions. And treating as if this is their business. And if they don't deduct this, or find this deduction, or ask the client about it, and not care, then it's as if they're losing hundreds of dollars or thousands of dollars too. Are we perfect? No, but we always try to be perfect. And that's really all I can ask of my team, and my tax manager reviewing the returns.
And the whole point of this conversation isn't like, hey, choose Chase to be your CPA, although I would probably choose you and the firm over anyone else just based off of the conversations. It's more or
Thank you.
less do the right thing, right? Like, if you you're opening a business that is going to be your life. Like, you're trying to make money and you're trying to maximize on as much as possible. Do the right thing and have someone in your corner to help you maximize on that. Yes, it's going to cost you a few bucks, but at the end of the day, I'd rather pay the few bucks than have to pay a whole ton more because I was uneducated, right? And didn't know what to do. And then the government had an audit or something, and I messed up.
Yeah, and I mean, most of the time, audits are really not what's driving the conversation. Really, it's just the structure and the tax savings. Um, and for us, you're paying for the knowledge, you're paying for the expertise. I mean, I've been doing this over 20 years. You're paying for my team's expertise and knowledge. That's what you're getting. It's when you build a house, you don't get the cheapest person to build the house. You want the right person that has the right knowledge and the right expertise to do it. And again, yeah, you're going to pay us, or you're going to pay any CPA for their expertise, but that relationship should be saving you money from day one, just like the example I gave with the 100,000. Yeah, you're going to pay us 5-6 grand annually, but you would have paid 3,000 more to the IRS. So do you want to pay all the money to the IRS, or you want to pay us and save 3 grand? Like, which one's better? So sure, you pay a CPA expertise, but from day one, we're making sure we save our clients and justify our cost. And that's just how we approach the business. I mean, I'll just tell somebody we're not the right fit for you, because it's just not, you can do it yourself right now. When it comes to taxes, sure, we'll do the taxes for you and help with that, but maybe they're not making enough to justify QuickBooks Online or do their monthly accounting yet. But or they're kind of scaling into the next section. So what does that look like? Or give us a call down the road. But we're just open with clients, and we just take ownership of what we do, and big on communication. We use multiple channels of communication. The number one thing we hear from our leads is poor communication, and so my team is always diligent about probably overly communicating with people. That includes the tax return, scheduling a Zoom call, screen sharing. A lot of preparers don't take it to that next level, and we're always trying to make sure that we're doing the best job we can to deliver the best product at the right price.
And just so I'm clear, and I heard you right, you said you recommend doing your own until you get to the 50,000 threshold, correct?
I mean, if you want to pay us to do it, sure, we'll take the business. But I mean, the cost isn't going to justify the means. I mean, that's kind of a general number. I mean, I'm talking about 50,000 gross revenue. So gross revenue, it's there's probably not a lot of transactions. I mean, if you're a one-owner consultant, keeping track of your mileage, mileage IQ is what our clients use a lot of, to keep track of that. App on your phone, use one credit card, use a dedicated checking account. You can download those into Excel annually, and then just categorize your few transactions from there. So it's really not necessary to do QuickBooks Online when you're that small, but if you're getting the 6 figures and you need to know what your estimated taxes are, you want us to advise on reasonable salary, and like maybe you're looking for retirement planning, that's kind of next level conversation, then sure, we need to start keeping track of some data, because otherwise we just won't know what you have going on.
And the reason I reinforce that is because there are people just starting out. And so I don't want to sit here and say, hey, go out and find a CPA today, right? I want to give them the knowledge that they need to make informed decisions. And that's all. And just to recap, it's important to do your homework. It's important to do your own research, and it's important to understand the importance of what the CPA's role is, what a business lawyer's role is, anybody's role for that matter. I mean, if I'm just putting my business into it, so if we're just putting shopping into it, right? I mean, we're not big enough yet for me to justify, like you said, the cost means, but that doesn't mean that I'm not going to get there. So it's really having a plan.
Yeah, and also knowing, we're always happy to have the conversation because we want you to know what you should be keeping track of. Like I said, have those dedicated credit card or checking account so you can keep track of the transactions. Because when January 2024 rolls around, you're not going to remember what you did in February 2023. Like you're not going to remember you had a business lunch that you charged on your personal credit card most of the time. So that's why I say have those dedicated accounts, so you can download those transactions and make it easier on yourself. And then keeping track of, home office deductions, utilities, rent or mortgage, etc. Um, Mileage, is usually a big one if you're driving around a lot. The Mileage IQ app, but Intuit has a pretty, I think it's free or it's a cheap product. The QuickBooks self-employed version. It doesn't give you a profit and loss or balance sheet, so it's not helpful, and we can't use it to file an S corp return. You have to upgrade to do that. But self-employed again, like kind of under 50K or basic transactions, like that's just a good software to start out with. So it keeps track of that, and you can categorize stuff, or just download it in Excel. But I would, kind of back to the formation conversation, since you mentioned starting out. We always recommend at least setting up an LLC. And especially if you're looking to have a brand name, or you kind of want to lock in a name you want to use. Just having, a lot of people don't understand, just having a doing business as with the state does not protect the name. And so if you want to protect that name that you're operating under, then you have to form the LLC. And again, if you're 100% owner, or it's you and your spouse that own it 100%, then you can just file a Schedule C on your 1040 with that owned LLC. So there's not a lot of complexity to it other than filing the annual state report. And other than that, it's pretty straightforward.
Yeah, that's what I do. So I use Intuit right now to categorize everything, and that it's just super helpful. Of course, yes, you can use an Excel sheet, but I like how Intuit walks you through it. So anyway, sorry, with that being said, if people want to get a hold of you, Chase, like what's the best means to get a hold of you in a world where there's instant gratification and a ton of social media?
Yeah, just hit us up on our website, insomniacpa.com. It's INSOGNACPA.com. Fill out the contact us form, and somebody will be quick to reach out to you. We're here all year, so we're not like most firms that disappear for months at a time in the summer. We're working with clients weekly, monthly, hundreds of them weekly, monthly. So my team's always around. I'm always here managing the business. We'll have a in-house person to reach out to you. When you call us, somebody's always answering the phone during business hours, and happy to have a conversation just like we're having now and make sure you're on the right track. That's really our biggest thing, is just trying to help and educate people. And for the right fit, and you want to work with us, great. If not, hopefully we'll see you down the road, and when you get more successful, and we can help save you more money.
Yeah, I appreciate that, Chase. I appreciate having you on, number one. Number two, for the listeners that are kind of in between or don't know what they need, like please reach out to Chase. He has the knowledge, and his firm will guide you guys into the right realm and really help you guys out. So please take advantage of Chase as a knowledge resource and a knowledge bank. Chase, thank you for being on today. I appreciate you.
Yeah, thank you. Thanks for having me.